It is actually based on bullions. They buy and sell the actual physical bullion. As the value of that changes in the market, so does this. You know, silver. Or you want to invest only in long-term U.S. Treasury bonds. Usually dealing with bonds, there is no organized bond market. Almost all bond transactions are so-called over-the-counter. Banks actually trade by each other through a network, something like Bloomberg or Reuters. You only get the information about the trades, but you don't necessarily. You cannot simply go to Robinhood or Charles Schwab or whatever you have and say, "Can I please buy $10,000 nominal worth of U.S. Treasuries maturing on January 15, 2045. There is no such thing because there is no organized market. But you shouldn't particularly care about a single maturity. There is an ETF that buys only the bonds, U.S. Treasury bonds, that have 20 or more years until maturity. You're basically investing into long-term bonds. And unless I am horribly mistaken, that was TMT. No. TLT, okay. And if you look at the holdings, it has only 15 basis points expense ratio. Over the last year, it actually lost money. Why do you think a bond portfolio lost money over the last year? Come on, you're almost all finance majors. What do you know that happened over the last year vis-a-vis bonds? Any banking majors here? Okay. What was Fed doing the last year or so? Mostly raising interest rates. Well, if short-term and Fed controls only short end of the yield curve, if short-term interest rates are increasing, it is almost surely the case that long-term interest rates are going to increase too. And as interest rates go up, value of the bonds go down. Remember, bonds are promises of future payments, right? I'm going to pay you this much in coupons every 6 months, and I'm going to pay you $1,000 20 years from now. If the rate at which I'm going to discount those future promise payments go up, well, the value of those as of today will come down. That's why bond portfolio lost money. In fact, when we are talking about bond investments, we're going to talk about that concept. This ETF has a duration of roughly 18 years. That means, approximately speaking, every basis points increase in the yield of this portfolio will decrease the value of the ETF by about 0.18%. If bond yield goes up by a full 100 basis points, this portfolio is going to lose roughly 18%. You kind of need to know that when you buy stuff like that. If you don't want that much exposure, well, you can buy something from 7 to 10 years. There's an ETF for that too. Bonds 7. Let me just, there it is. Let me see. It's IEF. Okay. Obviously, this also lost money over the last year or so. I'm basically on a hardline connection, by the way. This is not a Wi-Fi issue. This is an EKU IT issue. I got better Wi-Fi connection at home through Spectrum than I have it here. Oh, come on. Anyway, you get the idea. There's pretty much an ETF for a lot of things. Some of them are general enough. Let's say you want to invest only in pretty big tech companies, okay? You know, where are most of the tech companies traded? NASDAQ. There's an index called NASDAQ 100. They are the largest 100 companies that are traded on NASDAQ. We have an ETF that represents performance of that, okay? It's called QQQ, also known as the Cube. And I am sure Vanguard has something similar with lower management fee. It's going to come up. And over the last year, this actually did pretty well. But suppose you're greedy, you want to invest into QQQ, but you also want to invest with other people's money too, leverage. Normally, you would buy your QQQ on margin. Alternatively, you could buy shares in the ETF called TQQQ. It's actually 3 times leveraged QQQ, which means, at least on a short-term basis, if QQQ goes up by 1%, TQQQ would go roughly by 3%. Of course, the reverse also applies. If it goes down, you're going to start losing a lot of money. Suppose you want to short QQQ, okay? And you want to do it on a leverage basis, SQQQ. If QQQ goes up by 1%, SQQQ goes down by 3%, and vice versa. And you can actually use those quite a bit in managing the market risk of your portfolio without actually doing any shorting. They kind of manage the shorting process for you. For example, for my Roth IRA, by the way, Robin, if you're gold members, Robinhood gives you 3% match for anything you transfer to your IRA. At your age, I would definitely recommend you do a Roth, which means any growth is non-taxable. But you can't touch it without paying penalty until you're 59 and a half. So that's kind of the trade-off. I have some of that TQQQ on my portfolio. Okay? Because over the long term, I like tech stocks. I also like small cap stocks. So I invest into them leveraged. I also have some option stuff, but we'll talk about those when we get there. I have options on Palantir Technologies that are expiring in, I think, January 26. I don't know if they have the June one yet, because I have high expectations of that stock over the long term. Whether or not that will happen, we'll see. But if it does happen, come on. Yeah, they don't have, yeah. All right. Now, given all that, let's kind of start doing a brief review. That's what I'm going to do this week on basic stats, because a lot of the return and risk measures that we're looking at are about statistics. The expected return, risk, and that sort of stuff. Let's first download some historical return data for some ETFs. I'm gonna do only 3 of them because I don't want to spend too much time on it. But when I give you guys the homework, I'm gonna make you guys download about 30 of them. That part is gonna be the group part. So you divide the work. Well, let me see. And there's a reason I'm gonna do 30 of them. They will all represent different kind of asset classes. I just wanted you to be exposed with those. There are many places where you can get historical price data, but the one I like is financeyahoo.com. It's convenient, at least I find it convenient. And let's get the historical return data for VOO, which is Vanguard S&P 500 Index Fund. By the way, when you get a page on any stock in any asset in Finance Yahoo, you got a lot of tabs. I mean, this is not a stock per se, but there are even tabs for analysis, which kind of gives you the earnings estimates of the analysts, growth estimates, and that sort of stuff, which we kind of use a little bit in valuations. The purpose of this class is not valuation, it's more like analyzing risk and return of portfolios and how to enhance and manage them. So let's go to historical data. And by default, it just gives you daily about a year, but I'm gonna choose the max. So this ETF has been available since about September 8, 2010. For these purposes, I like doing it weekly because daily returns sometimes have day of the week effects. Weekly is, I mean, on average, for example, the returns on stocks are higher on Fridays than they are on Mondays, okay? Let me see, and I'm gonna apply.